Hey there. You ready to dive into the world of electric vehicles with us today?
Always right.
We're going to unpack some of the latest market analysis and try to get a feel for what's really driving this revolution.
Sounds good to me.
Specifically, we're taking a close look at AI Spirit Talk on electric vehicles trend,
Okay.
which covers everything from Tesla's crazy valuations to the buzz around EV charging and lithium mining.
Right.
So get ready for some serious aha moments as we break it all down.
All right, let's do it.
This report really highlights how Tesla has become this kind of enigma.
Mm-hmm.
I mean, they're involved in electric vehicles, yeah,
Yeah.
but also energy storage, AI.
Yeah, yeah.
They're challenging the traditional definition of a car company, wouldn't you say?
Yeah.
This report dives into something called sum of the parts valuation, trying to price out each piece of Tesla separately. Have you heard of this?
I have. It's a bit like valuing a Swiss Army knife, would
Yeah.
you say?
Right.
Each tool has its own function and value,
Right,
but
yeah.
together they create something even more valuable.
Interesting.
With Tesla, you've got the car business, of course,
Right.
but then you have to consider their energy storage operations, their advancements in self-driving technology and AI.
And even their ventures into robotics.
And get this. When you just look at their car business,
Yeah.
the analyst valuations are wildly different. Some value it as less than Ford, while others say it's worth more than double Toyota.
Wow.
That's a massive gap, so what on earth is driving that discrepancy?
Well, it's actually a few key challenges.
Okay.
One is that cleanly separating Tesla's car business is tough.
Right.
Is their charging network part of that? How about their self-driving software? It's all interconnected.
Yeah, it's almost like they're building this whole ecosystem.
It-
So how can you even compare that with a traditional car company?
It's not an apples-to-apples comparison, which makes it difficult. The other challenge is that analysts are split on how many cars Tesla will actually sell in the coming years. We're talking projections ranging from 4 to 8 million by 2030.
That's a huge difference in potential revenue, which directly impacts those valuations.
So the number of cars they sell is like this big question mark.
Yeah.
But I mean, aren't there like standard ways that Wall Street values companies?
There are, but even the methods used for Tesla differ.
Rail.
Some analysts see them as a tech company like Apple with their hardware, software, and loyal customer base.
Mm-hmm.
But traditionally, car companies haven't been valued like tech giants. For example, Apple usually has a much higher price-to-earnings ratio compared to Ford.
So are they a tech company or a car company? This report highlighted Gary Black's perspective.
Right.
And he's totally not on board with this whole sum of the parts approach at all.
Interesting.
Yeah. He's much more focused on their projected earnings growth.
And that's an important point to consider for any investor. Do you value a company based on its potential across different sectors, or are you more interested in seeing concrete earnings growth? There's no right or wrong answer,
Right.
but understanding these different approaches is key to interpreting those drastically different valuations.
Yeah, that's what makes this so fascinating, right?
Totally.
So we've talked about the car company dilemma,
Yes.
but as we know, Tesla's not known for staying in one lane.
Let's shift gears and talk about their other ventures: energy storage, robotaxis, even robots. It's almost like Tesla is giving investors this whole stock market, but just within their own company.
Yeah. It's an interesting way to look at it.
But let's talk about just one of those pieces, their energy storage business.
I mean, we're seeing so many headlines about these home batteries and, utility scale projects.
Right.
Is this where Tesla really shines? What do you think?
It's definitely a significant area of growth. Remember how we were just talking about the challenges of some of the parts valuation?
Yeah.
Well, even putting a price tag on just this one piece of Tesla is so tricky.
And this report brought up some big numbers. It said that just in the third quarter alone, they deployed enough battery storage to power something like 700 homes for an entire year.
Yeah, it's impressive, no doubt.
Yeah.
But you have to ask, how do you compare that to these giants in the energy sector, like a Nextera Energy?
Right.
They're currently valued at nearly $170 billion.
Oh.
It's a question of scale, existing infrastructure, market share, all these factors that investors are considering.
So it's like Tesla is this like agile speedboat and Nextera is like this massive cargo ship.
Yeah,
Both have their place in this world of energy, but they operate at totally different paces.
for sure.
And speaking of moving fast, what about these robotaxis we keep hearing so much about? Are those a key part of Tesla's future?
Well, it's certainly a captivating idea, hailing a driverless cab.
Right.
But Honestly, the technology is still in its very early stages. We have folks like Cathie Wood, big name in tech investing,
Okay.
and they are incredibly bullish on robotaxis. She projects a multi-trillion-dollar opportunity.
Multi-trillion. I can't even wrap my head around that number.
It's a massive number. But here's the thing. Not everyone shares that same level of optimism.
Where
Some are far more cautious, especially since Tesla hasn't actually completed a single driverless taxi ride yet, even as just a test case.
So it's still a wait-and-see game with robotaxis.
Yeah.
I guess taxi drivers don't need to update their resumes just yet.
Exactly. There's so much to figure out. Regulations, public acceptance, not
Yeah.
to mention the technology itself still needs work. All of those factors will determine how quickly, if ever, robotaxis become a reality.
Speaking of robots, though, Tesla is dipping their toes into that world as well, aren't they?
They are. Think AI-powered robots for manufacturing, logistics, all kinds of industries where they could be used to automate tasks.
Okay.
It's another one of those areas with huge potential, but still a long way to go.
All right, so we've got energy storage, which is hot, but it's got some stiff competition.
Right.
Then there's robotaxis, which sounds super futuristic, but who knows when they'll actually arrive.
Right.
And then robots are still basically in the prototype phase.
Yeah.
So if you had to pick, which of these non-car ventures seems most interesting from an investment standpoint?
Oh, that's a tough question.
Yeah.
It all depends on your personal risk tolerance and how long you plan to hold your investments.
Okay.
Are you looking for quick returns or are you playing the long game?
Right.
Are you drawn to proven technology or are you more excited by the prospect of something truly disruptive and new?
So much to consider.
I know, right?
It really is. Tesla's offering investors a taste of the entire stock market all in one place.
Yeah, it's pretty wild.
But let's switch gears here and talk about EVgo for a minute. It's
Lots of-
all about that EV charging, and they've been in the news lately.
Right.
What's their story? Yeah, they just secured this massive loan, and their stock has been on this crazy roller coaster ride.
Right.
What's really going on there?
It's a perfect example of how these market forces and industry trends collide.
Okay.
That loan from the Department of Energy, $1.1 billion, that really got investors' attention.
Yeah, I bet.
It's a big signal, right? It signals a strong belief in EVgo's potential for long-term success.
It kind of feels like a vote of confidence from the government in a way.
Exactly.
And I mean, it's probably also helping the EVgo actually owns their charging stations.
Oh, for sure.
Right. They're not just, making the hardware.
Yeah.
They're building the whole network.
They are. They're building out that infrastructure.
Yeah. So that direct ownership, I
Yeah.
mean, that's got to be attractive because it gives them more control over where they grow
Exactly.
instead of waiting for someone else to make the decisions.
Exactly. They can be more strategic, right?
Yeah.
They can strategically expand that network where they see the most potential.
That makes a lot of sense.
Yeah.
But then there's also this whole short squeeze thing that we keep hearing about.
Right, right.
Can you break that down for our listener? Because that sounds kind of intense.
Yeah, it can be, especially for those on the wrong side of the trade.
Okay.
Let's say an investor believes EVgo's stock price is going to go down.
Okay.
They can essentially bet against EVgo, right? So they borrow shares and sell them, hoping to buy them back later at a lower price. The difference, that's their profit.
So they're basically betting on EVgo to fail.
Essentially, yeah, they're betting against them.
Risky.
Definitely risky.
Yeah.
But then, when the opposite happens,
Yeah.
when the stock price goes up instead of down, like what happened with that loan announcement and all this positive buzz,
Right.
those investors, they're forced to buy back those shares they borrowed, but at a higher price.
Oh, I see.
And that buying frenzy, it drives the price up even more. That's the short squeeze.
Ouch. That's got to hurt.
It can.
So it's not just about understanding the technology.
Right.
It's about understanding how these market dynamics actually work.
Exactly. I guess.
Important reminder for anyone thinking about, jumping into EV stocks.
For sure. Volatility is just part of the game in a young, rapidly developing sector like this.
For sure.
But let's shift gears for a moment and talk about a pretty crucial ingredient in all of this lithium.
Yeah, you can't talk about EVs without talking about batteries, and you can't talk about batteries without talking about lithium.
Exactly.
It's the magic ingredient.
It really is.
And speaking of lithium, this report mentioned that Rio Tinto,
Yeah.
that huge mining company,
Mm-hmm.
might be about to acquire a lithium mining company.
Interesting.
Are they trying to get in on the EV game too?
It seems that way. Remember, lithium is essential for those EV batteries.
Right.
So as demand for EVs keeps growing,
Yeah.
so will the demand for lithium. And this potential acquisition, it suggests that they see lithium as a really good long-term bet.
Should we all, like, run out and buy lithium now?
Well, hold on a second. Here's an interesting thing. Lithium prices have actually come down a bit from their peak recently.
Really?
Yeah.
So is now a good time to buy while it's, potentially cheaper?
Well, that's the million-dollar question, isn't it? It's an interesting dilemma for investors.
It really is.
Yeah, it's a tough one.
So we cover Tesla, EVgo, and lithium mining.
Wow.
It's a lot to process.
It is. The EV market is moving so fast. It's exciting, but it can be a lot to keep up with.
It's true. Any final thoughts for our listeners before we wrap up today?
Yeah, I think the biggest takeaway here is that this industry is changing so rapidly. Tesla's a perfect example. They're pushing the boundaries of what we even consider a car company these days. But as an investor, it's crucial to look beyond the hype, understand the technology, evaluate the different companies, their strategies, and keep an eye on those market trends. It's a wild ride, but it's definitely an interesting one.
Absolutely. Thanks for breaking it all down with us today. Until next time.